All right, now the markets are up. They loved the CPI numbers, and those numbers pretty much came in line with expectations. Now, inflation is still rising, but it's not rising at the clip it was before. Now, year over year, inflation is up 3%. Now, that's the opposite of what we need to be seeing. We need deflation going down. We need home prices. We need vehicle prices. We need insurance. We need the price of food and goods and services going down. And we're going to be stuck in a whirlwind of the Fed talking about cutting rates and these CPI numbers coming in line. All that does is send commodities soaring. And when commodities soar, that means inflation rises. And we have oil up today, we have precious metals up today, and we have agricultural commodities up today. So these commodities are turning back up, and that's going to mean more pressure on your wallet. And again, we're just going to be stuck in a whirlwind. And I don't see the Fed cutting rates until 2026. That's right, folks, 2026. I see the Fed actually having the hike rates. Two things are going to happen here because street inflation, the actual inflation that the little guy is seeing, it's not going down. It's actually going up. And you can ask your mechanic, you can ask the worker at the local grocery store or the guy standing on the bus stop. Inflation is not going down, and you wouldn't be able to convince them otherwise. So we're going to have either the Fed, the government, lie to us and say inflation is going down, and they cut rates, and that sends inflation soaring again, hurting the little guy even more. Or the Fed and the government, they're going to get the real picture and say, you know what? Hey, inflation is still hurting the little guy out there, and we're going to have to hike interest rates again. And my bet is they're going to go with the latter, but it's going to be after the election. So my bet is the Fed, they're going to hike rates in 2025, and maybe in 2026, they begin cutting rates. Now, this might seem laughable for many, but go back to my earlier videos when I said the Fed would not be cutting rates in 2024. And I've been spot on. Now, the Fed just came out with their Fed rate decision, and they're not cutting rates. And they're estimating there may be one rate cut this year. But I'm here to tell you that's not going to happen. And if it did, it would only be symbolic to the election. Now, the troubles in this economy remain. We just had Megabus. We just had Coach, the parent of Megabus, file for bankruptcy. So the bankruptcies continue, the evictions continue, the layoffs continue, the factory closings continue, and everything's going to pile up at once and burst over top of this dam after the election. And hopefully at that point, we'll begin to see deflation. And for many people, that's a hard pill to swallow. We need rate hikes. We need prices of these goods to come down. We need home prices to come down, insurance rates to come down. And that's a hard pill to swallow for Wall Street. They love free money and low interest rates. That helps Wall Street. Now on the earnings front and data front, there really isn't much to speak about. And we're going to have the unemployment numbers come out tomorrow, and they're going to be in line. And we're pretty much going to end this week pretty quietly. The market's just going to continue to gradually go up. This quick stock market commentary, please like and subscribe.